We always enjoy checking in with you a couple of times a year. Let's turn to what the Fed chair said earlier this week, because it does suggest higher rates sooner. Is that good for your business?
There is no question that is good for our business. That's good for banks. If you look at the FDIC data, 2/3 of bank revenue comes from the spread between what they make on assets and pay for liabilities. And we're all asset sensitive in today's day and age. So rising rates will increase the majority of our revenue. So that's a huge positive tailwind for us.
And I guess it all depends on, or a lot of it depends, not only on what rates do, but on what loan demand looks like and whether higher rates depresses loan demand. Your loan demand lately has been very high, and particularly so for commercial loans. Am I correct?
You're absolutely correct. If you compare what's happened in the banking world since 2019, December of 2019, before the pandemic hit, loans for the banking sector are flat. It's unbelievable. The same amount of loans outstanding, which is roughly $10.9 trillion that was in 2019, is the same today. So the industry has been flat, but WaFd Bank has grown our loans outstanding by 16%.
What was the impact of the PPP loan program to your business overall? More than just that program itself, I understand.
Very much so. The PPP, from my perspective, was a generational opportunity for banks. It was really an opportunity to step in and show our humanity. Too often we get painted as evil bankers, and banking is good. Banking is a noble profession, and PPP was an opportunity for us to step in and help businesses when they most needed it. And for us, we did about $1.1 billion of PPP loans, about 10,000 loans, and 50% of those were to non-clients of the bank. So really an unbelievable opportunity for us to be helpful.
If you've got loan growth and you've got business is good for the bank, that would suggest that the economies in the states that you serve, what is it, 8 or 9 states now, are doing pretty well. Give us a snapshot of the economy in your part of the world.
Yeah, we're in the 8 western states, basically all of the West Coast except for California, from Washington down to Texas. And the economies are booming. Simply put, it's going gangbusters. We've got the confluence of an unbelievably talented labor pool with technology. And then you put the capital that's coming into the markets we're in. It's really fun to see. Look at Washington, for example. While Seattle has its challenges, Bellevue, Washington is going gangbusters. You have Amazon hiring there, Facebook hiring there. So all of the large tech is coming there. And of course, it's just in the backyard of Microsoft. So the biggest challenge we're seeing ourselves and also our clients is finding the right talent to hire. And that's really the obstacle holding back most companies, is getting the right people in the right seats.
Let's talk a little bit. I'm curious, why not California? Maybe we've asked you this before. Is it because of the level of competition there? Is it because of the regulatory issues that you would face there? Why stay out of that big market?
Yeah, and nothing against California. I'm from California myself, but if you look at the history of banks, a lot of banks that have failed over the years some of the problems have stemmed from California. And there are some very conservative borrowers in California, but there's also some fearless borrowers in California. The option arm, if you remember what led to the great financial crisis, was born in California. So it typically just doesn't fit very well with our conservative DNA. One thing about us, we're 8 consecutive years of net recoveries. Think about that. We've been operating for 105 years. In the last 8 years, we haven't had net charge-offs.